My name is Victor Meyer, and on behalf of our analyst team, consisting of Angela de la Peña, Emily Pentila, and Maria de la Vega, we warmly welcome you to the video presentation of the continuing coverage of Midsouth Bancorp Incorporated as part of the Birkenroad Reports program at Tulane University. In the recent 4 months, we had a close look at Midsouth Bancorp, and based on our research and findings, we came up with a 12-month target price of $9, which equals an investment rating of market perform. In order for you to better understand how we came up with this valuation, we will provide a brief overview of the company, explain how the stock performed in the recent 5 years, and look at the market, at the peer, and the risk analysis of the company. We will conclude the presentation by explaining our projections, the valuation that we came up with, and our investment thesis and summary. Midsouth Bancorp was founded in 1985 in Lafayette, Louisiana, and is considered as a regional bank. The company has a market capitalization of approximately $92 million as of March 2016 and total assets of approximately $2 billion. Major products of the company are loans and deposits, which is a typical ratio for a regional bank. Most of the loans and deposits of Midsouth Bancorp are exposed in the Louisiana region and east of Texas, especially in Dallas and Houston. Midsouth Bancorp has a high exposure to energy lending. Approximately 20% of the loans are directly related to energy lending, and a high proportion is indirectly related to energy lending because of the high importance of this market in the regions Midsouth Bancorp operates in. In the last 5 years, Midsouth stock was highly volatile. Between 2011 and 2013, the stock was highly affected by some major acquisitions that Midsouth Bancorp did in this time period. The last acquisition that Midsouth Bancorp did was at the end of the year 2012 when they acquired People's State Bank. This in fact was the largest acquisition with a deal value of approximately $40 million. The year after the acquisition, the stock continued to perform well and reached a 5-year high in July 2014, trading north of $20. Since then, the stock dropped dramatically. This was mainly due to the volatile energy markets, which Midsouth is highly exposed to. In June 2016, the stock price dropped to $15.51, which is the 52 weeks high of Midsouth Bancorp. After that, the stock dropped even to $6.51 in February 2016, which is the 25 weeks low of the stock performance. Since then, it slightly recovered to $8.16 as of March 2016. As regional banks are highly dependent on the regions they operate in, the macroeconomic environment is one major factor influencing the performance of a bank, such as Midsouth. Another factor that is influencing the performance of banks and financial institutions in general, but especially regional banks, are the regulatory requirements in the regions they operate in. Especially small banks have a big trouble to be compliant with the regulatory requirements because of the smaller capital base and the smaller staff that they have in order to perform the regulational requirements. If we look at the peers of Midsouth Bancorp, with whom we can compare them with, we had certain requirements that peer companies have to fulfill in order to be taken into account. First of all, we wanted the peer companies to have a similar regional exposure, such as Midsouth Bancorp. So they should have high exposure to operations in the Louisiana and Texas region. Additionally, they should be similar in size in terms of market capitalization. So our requirement was a market capitalization in between $50 million and $1 billion. They should have a similar customer background and a product focus with a major exposure to loans and deposits. We identified 8 companies who fulfill these requirements. Looking at the relative performance of Midsouth Bancorp, we can see that at most of the performance ratios, Midsouth is trading below their peer group. However, in terms of the Tier 1 capital ratio and the LTD ratio, Midsouth Bancorp is showing a more conservative approach, which in this difficult time period can be a USP for the bank. Looking at the risks, we identified 4 different risk types. Of special risk, as mentioned in the market analysis, are regulatory requirements. Additionally, and this is specific to Midsouth Bancorp, the operational risk has a high influence of the future performance. Especially the accuracy of loan loss provisions is a major factor, as if it comes out that loan loss provisions were too low calculated, this could lead to higher net charge-offs than the provisions show, and this could show a major concern in terms of profitability and liquidity situation in the future. If we're looking at the development of the net earnings from financial year 2014 to 2015, we can see a dramatic decline from 18.4 million to 10.3 million, which is mainly due to a high increase in loan loss provisions. This led to a decrease in the earnings per share from $1.63 to 91 cents in 2015. Going forward, we assume top-line growth to be on historical averages. This means that we assume the net loan growth to be at approximately 2.7% for the period from 2015 to 2025. We have a stable loan-to-deposit ratio at approximately 80 to 85%, which was consistent over the last 4 to 5 years. Additionally, we assume a stable net interest margin. This will lead to a top-line growth of approximately 2 to 3%. On the bottom line, we assume reduced loan loss provisions, as we think that the energy markets in the mid to long term will come to a normal value, and this will lead to a decrease in loan loss provisions of 4.9%. Additionally, Midsouth improved their efficiency ratio in the last years, and we expect this development to continue, reaching 66% efficiency ratio in 2025. These factors taken into account lead to an increased margin and an increased bottom line growth. Overall, net earnings will increase from 11 million in 2015 to 22.8 million in 2025 according to our projections. The earnings per share in the same time period would increase from 91 cents in 2015 to $1.66 in 2025. These factors taken into account, we came up with a valuation of $9 for the 12-month target price. This valuation is coming from an average of 25% of 4 different valuation techniques: the DCF owner earnings, DDM, price to tangible book value, and PE. In the DCF owner earnings, we discounted the net earnings because this is of more importance for banks than the free cash flow. We can see in the valuation methods that the valuation from the market-based approaches yield a higher value in opposite to the DCF owner earnings and the DDM model. Regarding our investment thesis, we see that market development and market drivers will affect Midsouth Bancorp stock in the short to midterm, especially decisions from the Fed to increase or reduce the rates and the energy market volatility that was seen in the last year and that we expect to continue in the short term. However, Midsouth dividend policy is shielding investors from reduced stock performance, as they, even though earnings declined, were still able to pay out the same dividend level. In the long term, Midsouth will still be an energy lending focused bank. However, they want to diversify their loan portfolio into other regions as well, and this will in the long run be able to increase the performance of the bank. To summarize our presentation, we want to first look how Mr. Ben Graham, one of the most popular person in equity analysis, would look at Midsouth Bancorp stock. He introduced several hurdles that have to be taken into account for a stock in order to be considered attractive. Applying these hurdles to Midsouth Bancorp, we can see that Midsouth is performing positive on 5 out of the 8 hurdles. Midsouth Bancorp doesn't meet the requirements for total debt being lower than equity book value and for a current ratio of more than 2 times, which is however to be taken critically for a bank because most of the banks do not have this kind of ratios in place for the balance sheet figures. What would pose a higher concern to Mr. Ben Graham would be the failed stability in growth of earnings. As the earnings per share in 2015 declined dramatically, and most analysts, including also our projections, assume a further decline in earnings per share in 2016. Overall, Mr. Ben Graham would be slightly bullish towards Midsouth Bancorp stock. Our valuation, as mentioned, has a 12-month target price of $9 and an investment rating of market perform, so we are in line with Mr. Ben Graham's analysis. However, to be more precise, we assume that in the short term, the market drives pressure on Midsouth Bancorp stock. In the long term, however, we think that the high experience of the management and the higher diversified loan portfolio will have a significant upside potential for Midsouth stock. Please keep in mind, the Berken Road reports are produced solely as a part of an educational program at Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.